Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Jaynel Christensen, the Chief Growth Officer at Commonwealth Credit Union. We start off with a discussion about what it means to be a Chief Growth Officer, a relatively new title, what that's combining, why that reorganization made sense to the credit union in terms of driving the best member experiences. We dive a little bit more into the in-branch experience, what that looks like in the future, how far it's come. And also the history of Commonwealth has a number of Fintech partnerships. And so we dive a little bit into how you find the right kinds of partners, how you manage those relationships, and some of the AI threads that run through some of the recent partnerships. I think it's a fascinating conversation and certainly a great set of advice and interesting perspectives for anyone thinking about what it means to grow a financial institution in this day and age. So without further ado, please enjoy this conversation with Jaynel Christensen. Jaynel, thanks so much for joining me today and making time to share your thoughts on the podcast. I really appreciate it.
Thanks, Jeff, for having me.
We had a nice conversation before this, and I think there's a lot of really interesting things to delve into. But I feel like a good jumping off point for all my conversations these days is asking about how you got here, because I kind of make the same joke in every episode, which is probably getting old for the audience. But like most of us didn't grow up dreaming of being bankers, lending officers in the credit union banking space, and yet here we are. Tell me a little bit about how you got to where you are and what your career progression looked like.
Yeah. So actually this month I've been at Commonwealth for 21 years. So I tease that my former boss who recently retired, hired me like out of kindergarten. So I feel like I've grown up here, not quite kindergarten, but I have grown up here for sure. And like you said, I was never that person that said, oh, when I grow up, I want to work at a credit union. It was just kind of one of those, honestly, jobs that you fell into along the way. It was a good job. It paid, a decent salary at the time. And it pays a solid salary, at the time starting out, it's entry level. So there's, a lot of opportunities there. And then somewhere along the way, I kind of found my fit. I think a lot of it becomes the people. I said something at my 20-year anniversary on social media. It's like, you start in a job that turns into a career, to coworkers that turn into family. And I think that's really what was a differentiator for me, I guess, for why you stay someplace for so long. It becomes more about who you're with and what your purpose is than what you're doing, on a day-to-day basis. So I started out as a loan assistant in the contact center. So I did telephone loan applications when I started out, and went from there to different levels, I guess, of that role into a credit card analyst position. I had the first role of that here at Commonwealth, which the sole position was to review our credit card portfolio and figure out how to make it grow. So that was kind of an exciting role, and it was new. And new roles are always good because you kind of get to define what they look like. There's nobody before you that's ever done it to set the bar. So that was a really fun, exciting role. I enjoyed. Worked with a lot of different people, a lot of departments in the organization, and even external partners like Tim Kolk and others who are just really strong in the credit card market and industry. And then from there went to more of a leadership ladder of supervisor, manager, VP of lending, and then chief lending officer, and then most recently into chief growth.
All right. Well, you've been perfect transition. I love the career. I love your point that new roles are good. I don't think everybody thinks that way. Like an undefined role can be scary for some people. Like, I don't know what I'm measured on. I don't know exactly what I'm supposed to do. There's no playbook for me to follow. But for the right people, an undefined role that's never been done before is like an exciting opportunity to lay new ground and figure out what makes sense and what the priorities are. So it's interesting to me you describe it that way, because I'm not sure everybody would.
Yeah, right, I think it's a good opportunity. Sorry.
No, go ahead.
I was just going to say, just reiterating what you said, I think it's always a good opportunity to, you get to set the bar, you get to determine what everything looks like, rather than having to live up to maybe something that was there before you.
Yeah. And sometimes it's a great opportunity to rethink common wisdom, because there's not a way we do things yet. And so it's a good chance to go, let's rethink how we want to approach this thing. Well, I want to jump off from your chief growth title because I saw that and then I said, well, that's growth. I feel like mostly I hear growth from Silicon Valley companies that think marketing is a bad word. And so they just call it growth. And it's a little different, but I don't hear it a lot from my credit union or bank colleagues, this idea of growth. And I'm curious why that's become a title and kind of what that indicates more broadly about how you're thinking about the future of the organization. Because I think it's a really interesting title to put into the space.
Yeah. So we actually have several title changes at Commonwealth that occurred here recently. Our CEO did a complete review, revamp, and kind of a reorganization. And the focus of that is, really where we're going and our position competencies, encompass that focus, and it changes the direction a little bit of maybe where we were going before. So the chief growth is actually more of a combination of what we would be traditionally considered as the chief lending officer and the chief operations officer, who would be over the branches. So like my umbrella oversees the lending area, consumer lending, commercial lending, mortgage lending, and indirect lending and underwriting, all of the lending functions that you would normally have. And then the operations side of it is the branch, the central services for our contact center, and then the ITMs. So I think it's a really neat combination because over the years, the two areas, you'd always hope there's not, but there's always a little bit of silos of my department and your area and this area. And, I really hope that having it all under one umbrella, that there's no hesitancy to walk across the hall and let's figure this out. We're all on one team. And while we're all on one team, even before, I think it reiterates it because, we are pulling people right now from mortgage to answer contact center phones. I don't know that we would have done that 6 months ago. I don't know that as a chief lending officer, I would have known how dire need the contact center was. And then it would have been an initial thought to say, hey, mortgage volume's a little slow. Let's see if they can answer the phone. So I think it gives us a great opportunity to utilize our resources to break down barriers and to focus as one large part of the organization on growth and growth of our loans, growth of our memberships, just growth in general.
Yeah, I love it. I love that kind of combination. It reminds me of a lot of my conversations talk about, starting with the customer in mind in terms of how you build your org chart, as opposed to so often we end up building experiences in particular that reflect how we are organized as an institution, as opposed to what the customer actually needs from us. Well, the phone tree is maybe the greatest example. Well, I can't help you with that. Let me pass you off 3 times to people who can handle your thing, which is like makes sense from the organizational point of view, but probably not from the customer's point of view. And it sounds like that focus on unifying the experience and the team to serve the customer needs is kind of at the center of what you guys are trying to accomplish with that.
Right. And we, have a senior VP of member experience that came out of the reorg as well. And so that's one of the VP positions that report up to the chief growth. And that position, is focused on member experience and, how does that look? Because I think the member experience today looks different than it did 15 years ago. We have a very strong initiative, for technology in our organization. And I think that changes what the experience is. In my mind, the branches become more of come in, sit down with me. Let me show you how, let me take care of this for you, but let me also show you how you can do it yourself. Maybe next time you don't want to get out and come here. You just don't know how you can do it, through the app. And I think we've invested so much in technology as an organization. We really, really want to help our members know that they have choices. If they want to come in, that's awesome. We'd love to see them. Always love seeing our members. But if they don't, they can self-serve from, right there at their own hand with their phone and turning those into kind of like even Apple. I mean, Apple, you walk in and they teach you how to use your device, most of the time at the store. So kind of that same concept, I think is,
are you putting a Genius bar in the branch?
Yeah.
Are you putting a Genius bar in the branch? Something like that?
Yeah. I mean, nothing's set in stone, but that's kind of the off the cuff direction I think that, we're going to as an organization. And when we look at where do we go from here?
How do you think about how that changes the training or objectives, or I mean, I feel like the experience of the person in the branch and the skill sets that are required and the way they might be measured or evaluated shifts as you move to this environment, right? It's not the same old thing. It's a different experience, which can be intimidating maybe for some, could be exciting for others. But I'm curious how you think about the change management of the frontline people, because you're really shifting them from a more transactional oriented, I go into the branch today and they're there to kind of like, what do you need me to do for you? And now you're asking them to be, maybe genius is the wrong word, but more advisors, more consultants in helping people kind of self-serve, which is a different skill set. So I'm curious how you think about managing that process and that change for those frontline employees.
Right. Well, I mean, everything's still very conceptual at this point. I mean, we have the senior VP of experience, and so we're starting to review a little bit of this, and that's our kind of a, like I said, off the cuff direction. I do think that there's a lot of hesitation from the branches. I mean, even as you have conversation with leadership in the branches and start to mention these ideas, that the first question is, well, how am I measured? What are the metrics? What's the reports going to look like? And I think that that's where, as an organization, and we have to figure out that. I don't know today. Somebody asked me that question yesterday. Well, what does that mean to me? And I was like, I don't know. And I'm okay to say that. We'll figure it out along the way. Before you're required to be measured anything, we'll have a conversation. You aren't going to be required to meet goals that you no longer sit down and open accounts, because we're doing it all through the app. But if it's a better experience, then that's the focus. I think at the end of the day, if we're providing the best experience, the numbers are going to come. And I think that if we focused more on that and maybe less on the numbers, I'm a numbers driven person, so that's a big statement for me. So, but I think the numbers will get there, and we'll find metrics as we go through the process. How many experiences did you have with members today? Is that as valuable as opening 5 accounts if you had 12 experiences? I think those are things that we'll work through. And I think there's some coaching to be done for the team members in those areas for us to figure out, what does their role look like? And is it one that they still find that they enjoy?
I love that approach of not defining the metrics, because not that you're not defining them, but this old, I think, quote from Patton, which is going to sound wrong, but like, battle plan never survives first contact with the enemy. And not that our members are the enemy, but thinking what the right experience is before you have it, and what you should be measuring branch employees on before you're actually in market, finding out, I think is a bit naive. And often you can set those metrics, and then they kind of dictate the outcomes, and you kind of want the reality to dictate the metrics, not the other way around. What's driving the best experience? And so it's, a lot of operational organizations can't do that. They're like, I got to have my metrics and my stuff set before we go. But I like the approach of, you figured out that's certainly what our journey as a startup has been, is like, you get market, and then you figure out that the 3 things you thought were most important are not, and the 2 things you thought weren't are, and then you adjust your focus and your metrics, and you drive towards the ones that are delivering the value to the customer.
Yeah. And I mean, obviously we'll have our basic matrix: opening memberships, growing loans, and creating a positive member experience, are the basics that should drive everything we do. And, if we're providing that good experience, the numbers are going to come, and we're going to see those. We're going to find what those things are as we go through the process. So we'll work through it.
I'm excited to have you back in a year or two and tell me what you've learned as you've gone through this experience, because I feel like it's a shift everybody's sees, but not everybody is fully engaged in, and your learnings will be really interesting.
Yeah. I guess along with that, as far as the other key areas, another one that we have is a chief brand and advocacy officer, and the advocacy officer portion, advocacy, was added during the reorganization that was completed. And I think that's another one that, as we look as a credit union in the industry and the different things that are occurring, that's an area of focus. And so that's why the CEO had decided, this is really an area that we need to make sure is a clear focus for our organization, for the industry, and added that in. So I think both of those, the experience, the growth, the advocacy, all of those.
Help me understand advocacy a little better. What's the focus of the advocacy? I mean, chief brand officer, I get, But what's the focus from an advocacy point of view? What's the kind of goal or objective or set of things they're focused on in that?
I think
part?
it's not my role, so it's held by someone else here. So I'm probably going to butcher this. So just know that in advance.
Apologies in advance.
Right. So apologies in advance for that. But in general, it's, the awareness of the items that are being considered, on the Hill, knowing who to talk to, and being able to share those, concerns from the credit union perspective, and having the information for us as awareness. So you don't have there's a debit interchange item that's been a hot topic, that we aren't surprised by that. But that doesn't come down and get passed. And then it's like, oh, look what happened. That we're aware of these things, and we're actively, using our voice to try to share, how this impacts us as a credit union, rather than sitting back and seeing what happens.
I like it. It's certainly there seems to be a lot of energy in DC and in state capitals around topics related to financial services. Some bills, some more conceptual topics that are not at the legislative stage yet, but they come fast and furious, and they can have unintended consequences. So seat at the table is a great idea. I wanted to delve into one other area I know you guys have spent some time in, which is fintech partnerships. Because while some of the growth stuff and the shifts in the branch are evolving, I feel like you guys have been a little more mature, and that's part of your strategy for a while. So can you tell me a little bit about your approach to fintech partnerships? And I got more questions, but we'll just start with that.
Yeah. So, I think that Commonwealth is like everyone. I feel like 5 or 6 years ago, you hear the word fintech, and everybody was, well, how do we compete with them? How do we offer the same thing that they're offering? And you went through that process and kind of, looked at it. And then I think somewhere along the way, 4 or 5 years ago, I guess, we looked at it and like, okay, so that's not an option. That's not working out. At least not in the particular items that we were reviewing. I mean, the technology that they have and the speed at which they can roll it out is incredible compared to, our pace. And, it was more of, okay, so we can't compete, so let's partner. Let's find the ones that we can work with that are true partners for us. And I think that has been critical. We had an opportunity to really have our first lending fintech partnership back in 2018. And so we started a partnership at that time with QNexus. And, they kind of define, when I think about other fintech partners that we talk to today, that what we're looking for. And for me, they were a partner that was there for us along the way. We learned together through the process. And I think that's really important, that they just don't hand you their finished product, because I think a lot of times credit unions need that guidance. What we're getting from them is something we likely can't do ourselves, and we need somebody to help us with it. And I appreciate a partner that doesn't just hand me the finished product and says, best of wishes, let me know how it turns out. So I feel like that constant communication as you're in the rollout, and even, post implementation, are you having regular conversations, 3, 6, 9, 12 months check-ins of, what else can we do for you? And, listening and getting feedback from you on improvement. And that to me looks like a partnership. And on the same side, I guess for them, we are a voice for them. We're happy to do reference calls. We've had an opportunity to have, a few other fintech partnerships since the 2018 one with QNexus, and we've launched Zest, and, recently started the partnership just a few months ago with Upstart. And so, with any of those, we're always welcome to, do reference calls and share our experience, because, we believe that these are solid partners for us, and we want to, share that with others. And so I feel like it goes both ways. They help us and we help them.
Absolutely. So I got 2 follow-up questions on this, because I think it's a really interesting area. One, I totally agree with your point about partnerships. How do you think about determining before you sign a partnership if you're going to have that kind of relationship, or if it's going to turn into more of a traditional vendor, hands off, you bought the thing, now it's yours? Like, I get that you want that, but how do you figure out in advance if that's really how the partner operates, or if you're going to end up with a less ideal scenario?
I don't, it's one of those things, like, I'm not sure that there's an exact science. Like, there's not an exact thing that we say, Yeah. In order to be a partner that's going to follow up with us, and they must, demonstrate characteristics A, B, and C. And that's the for sure win that we know that they're going to be great partners for us. And it doesn't feel like that ever is the case. I think, somewhat in the demonstration processes and the attentiveness and just the overall feel of the team. And some of it, somebody asked over the years, well, how did you know QNexus or how did you know Zest? And I was like, gosh, it sounds terrible to say this out loud, but it's kind of a gut feeling, at least to some degree. I mean, I think you just feel like, yeah, this feels good. This is a good direction. This is a good partnership. And then the references are always great because they always say, oh yeah, I work with them all the time. Or I don't. And they never, they handed me a product and they wished me luck. But I think early on, you figure out how well the conversation goes and how attentive they are to when you talk about, well, how will this 3-month call look, or what happens post implementation. If they don't have a really good answer, they're probably not going to be around.
Yeah. And then my second part of that is, how do you think about effectively managing those partnerships? I mean, my experience is they typically, you know, the launch is not exactly what you expect. And then there's a iterative process to getting to the happy place. And then there's often stuff that was not in the phase one scope that is like, hey, we can now go do A or B or C, or there's a new capability or a new thing we could do, or a new customer segment we could target, or whatever it is that kind of expands the pie. That's part of an evolving conversation. So I'm curious what your best practices are for kind of like managing those ongoing relationships effectively to scale. Because I do worry that I do see credit unions and banks who sign up for stuff and they go, I don't have a plan for post, and I don't have like a good mechanism for managing that, and then it kind of like sits on the shelf and doesn't drive the value it was expected to. Part of that is the relationship topic, but I do think part of it is a strategy for managing that program on an ongoing way and that relationship at the institution side. And I'm curious if you've seen anything in particular that works effectively, or advice you have for others who are looking at partnerships saying, hey, how do I get the most out of this?
Right. I think that in the beginning of any partnership, there's a significant amount of time that's spent from both parties. They're helping us along the way. We're trying to figure out how to get everything up and going. And like you said, somewhere along the way it launches, and there's always a few hiccups. I think if there's not hiccups, then there's probably something wrong, because it's just the way it's meant to be. I've learned over the years. Um, so, I mean, that's just, par for the course, I guess, as they would say. But beyond that, I think that you have to figure out the priorities as an organization, and, how do the things that are rolling out for this software, you know, impact your direction. So, for example, QNexus, there's a rollout every probably 6 to 9 months of a different version. And so initially we were really aggressive in taking those rollouts. And then, now we're a little bit less aggressive, and we let it come out for a few months, and then we take those rollouts, but we plan on those because we know that the value of what's being added is worth it. So we know that it's going to take some time to install this. We need to do some testing. And so we kind of slot that time for our project specialist. I think the other side is we handle these relationships within the loan umbrella, or what would have been, I guess it's the growth umbrella now, but within the loan department. So, when and I think those team members really understand what they're working with. An IT team, play a role, and they have a support role in the server and other pieces. But at the end of the day, they don't know loans. They shouldn't. It's not their job. So our kind of project or process support team, I guess, really understand the goal of the software. So when they see the demo of what the next release does, they can say, oh, that's going to help the member so much, because I remember when this da 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 da, and they see that value. And then I think that helps keep it top of mind. Whereas if we didn't have somebody in our area focused on watching those releases or reading about those that are coming out, then we may miss something because somebody else may not recognize the value from a lending mindset. So that, to me, I think helps make it really top of mind. And then they're able to communicate why it's good, because they know the lingo that when they come and say, well, they're going to be able to click here and they're going to be able to click here, and it's going to give the application in 2.4 seconds or whatever it is, whichever software you're talking about. That's going to speak a lot more to me than if you send me a dissertation on a release that you watched and you're not maybe from the lending area background. And you're trying to describe how this is going to improve things, but you're not really sure. So, I mean, I think having people that are familiar with the job that it's doing are important. I know other credit unions have different, QNexus is housed in marketing, and maybe that works for them. But for us, we found that this kind of works for us.
I love that focus on the line of business. The other place I see in less credit unions, but more banks, probably is the innovation office that's like out there with the goal of finding cool fintech partnerships or whatever, but then they're often not as well connected to the actual businesses that the partnerships are about. And so that,
Mm-hmm.
drive for, hey, do you want to grow volume? Well, I had a little budget here as a task, but like, I'm not the lending guy who has the balance sheet that could be allocated to this, or who has a competitive product that we didn't think about how to fit this next to, because we wanted to, so that ownership by the people who really own the lending business or whatever the business might be. I think most partnerships are in the lending space, I think, is a really interesting point on how you keep ongoing alignment and strategic, focus on this versus like, yeah, if it sits in IT or it sits in innovation that's detached from the day-to-day actual operations of the lending business, you can kind of end up with a partnership that just is like, that was cool to say we did it, but it's not really driving the business forward. Interesting. And then I had one more question on your fintech partnerships, because you said Zest, who I know well, obviously Upstart, I know pretty well, I think at this point, just a little bit. But the thread between those two is the use of artificial intelligence, right? And the kind of advanced capabilities on underwriting. So I'm curious if that's just like happened to be something that you had two partnerships that were leveraging, if that was a focus area, and how you thought about getting comfortable with the idea of, the utilization of AI in these areas, because it is a new and more evolving space, maybe not as widely used using AI in underwriting. So I found that thread interesting between those two partnerships and was curious your thoughts on like why and how you thought about AI in particular as part of those partnerships.
Yeah. So Zest was kind of one of these products that I saw a few years ago at a conference, and I thought it was great. I was really excited about it. I came back and we were in the middle of a transition trying to figure out core and different things. So it wasn't a product that at the time fit. So a few years later, after we got our core updated and we were at a better place, we kind of revisited that. But I think the AI technology is, something that we had to get used to and really learn a lot about. And that for me is when we talk about partnership, that goes back. Zest was phenomenal at that. We had a guy that he's no longer with the company, but every week he sat down with our lending team and he taught us about how they measure the technology success. And I don't know, there's KS scores and there's all these different things that are involved in the whole AI implementation of an underwriting model. And so every week he sat down with like this PowerPoint and taught us about it, because we were all really adamant that in order to speak to examiners, in order to speak to others, that we needed to be intelligent on this process. And so the AI focus is a little bit scary because it's unknown. But when you look at the technology and what it provides, our vehicle Zest score looks at 194 data points in 2.4 seconds. When I need underwriters to turn loans in 5 to 7 minutes. I mean, that's our underwriters' kind of goal, is that you get the loan back in 5 to 7 minutes. On average, let's say that they can look at 10 to 20 data points, maybe in 5 to 7 minutes, in between answering the phone, trying to answer a chat, and everything else that they're doing. There's no way that my team can be as accurate as the Zest score. And then you take that a step further. I don't feel like we're unique in this. People, turnover in the underwriting area has been, hard, as hard a hit as any. And, that's the other piece. That's a key area of the business that we need experience, and we need some really solid underwriting to help, mitigate and reduce losses and prevent losses. And our underwriting team, didn't have the experience 20 years ago when I started. If I walked up to a leader to look at a loan, they had 15 plus years across the board, everyone, that I was working with at the time. And I mean, today my underwriting supervisor has, I think 7 months in that role. I've got somebody else that's been there maybe a year, and we've got one guy that's been there 5 years. So it's a lot less experience than what we were used to as an organization. And we knew that in order to compete and in order to provide, those fast decisions while we grew, implementing that AI technology was going to be a necessity.
Love it. That is great advice. I mean, it's just probably, I always say now that I think when I go to conferences, AI and maybe crypto a little bit less, but crypto are like the two topics you can't avoid. And I feel like half the startups are put them in the end of their pitch deck, whether they do anything with them or not. We're going to do something with crypto because it sounds sexy. So there are at least two areas that I think everybody ought to have thoughts and a strategy around because they're clearly topical conversations.
Yeah. Well, and I think that, it's the future. I think that things evolve and, it wasn't there 20 years ago. So it's a little bit hard to understand. And I'm a little, I like everyone else, I'm a little bit skeptical of the unknown. But the reality is, we're almost a little over 18 months in our Zest score, and the number of performance is incredible. So I don't have an underwriter that can underwrite as good as Zest in 2.4 seconds.
There, it's pretty good. There's an advertisement for the Zest guys. You're welcome. I'll call Mike and ask him for a fan. No, all good. We agree, and I think that is the future. Is we always look at it not only on the loss mitigation side, but on the other side, which is like when you're more accurate, you can serve more consumer. Whatever your loss tolerance is, you can actually serve more of your customers within that loss tolerance when you're smarter about underwriting. And so I always think of it from that point of view, like how do we actually get credit union price capital, bank price capital in the hands of consumers, credit at reasonable rates, at low rates to the most number of people. And AI is there. It's more accurate, it's faster, and it allows you to actually therefore either mitigate your losses. Maybe that might be the focus today as we record this in a kind of scary macro environment. But I think over time, it's also how do I maximize the consumers I can serve within whatever my institution's loss tolerance is. And that's I think kind of what got us all into the business in the beginning is like, how do we actually help the most number of people get access to credit and the opportunities that unlocks?
Yeah. And that definitely is a focus for us. And I think that goes back to that experience concept that we talked about with the reorg and the new positions there. We want that incredible member experience. How great is it when you apply at 8:00 tonight that you get a decision back instantly because Zest is able to come in there and, with the score, give a decision back that meets the criteria. So, and we're able to serve, new areas that we're moving into that, may have a little bit different, economic makeup than, a traditional member would. And so, like you said, we're able to say yes more.
All right, Jen, this has been a great conversation. I got 3 questions I ask everybody at the end of this podcast. So here you go. First question, what's the best piece of career advice you've ever gotten?
So I thought about this one because there's one kind of more like off the cuff answer that I was going to give. That's not quite as thoughtful.
You can go 2 if you want. I'll give you 2.
So the first one is I worked with, a leader several years ago, and I think that most people are this way, but regardless, there's a lot of responsibility that all of us feel for our job every day. And something would break or we would do one of those, infamous launches like you mentioned, and it didn't work. And it was terrible in my mind. Like the world was coming to an end. And he was great. And he was, a few years older than me at the time. And he sat down and he was like, nobody's dying. And it was so simple of words. It was just like, I know nobody's dying, but I think that I might. And he was like, we're not doctors. Nobody's dying. This is not that big of a deal to get this stressed out. And I think that, at the moment, maybe I didn't take that as much to heart, but then, as maybe a little bit of maturity and years came along and you realized after a few more launches that things don't go as planned, nobody died. And so that's probably one that I repeat pretty often to my team when they get really stressed out because we all feel a lot of responsibility for it to go right 100% of the time is I would love for it to go right too, but nobody died and we'll be okay. So that's kind of the more off the cuff funny one. The probably the more thoughtful one is I had a leader that said learn enough, become educated enough that you have a choice for your next career move. And that way it's your choice. Make sure that you put yourself in the position that you've taken enough initiative, that you've got enough degrees, whatever that is, and, that you get an opportunity to sit down the table and make a choice if you want to do something different. You don't have to make a move, but if you want to, it's good to have, be prepared enough to do that. So I thought that was good.
Take control and have choices. Good. I like both pieces of advice. Both are thoughtful in my opinion, even if one's a little more off the cuff. All right. Second question. What's the best piece of advice I've often said have gotten or would give about the consumer lending space in general?
So I think this one is don't let fear keep you from changing. And when I think about even the topics of our conversation today, QNexus was a huge organizational shift for us. It was a different way for us to do lending than we ever had before. And I remember some pivotal moments of a conversation with my CLO at the time that right toward the end of launch, I started getting a little bit nervous. It was like, this is a big deal. And it was a great direction for us as an organization. And had I let that fear come over me and change maybe the parameters that we had set up with QNexus because I didn't want to trust the system. And then I think it would have really changed the success of the program for us and really maybe even our outlook in general on fintechs because it wouldn't have been as successful for us as it is. So I think that you kind of have to embrace that fear. Things change every day and fear is good because it makes you second guess it. But then I think you also have to, push through the fear and trust in your decision. And maybe not fear the change.
Okay. Not lack of fear. I like that. And I think it's so good because it kind of connects to your off the cuff advice, by the way, which is like, when you're scared, it's often because you're imagining something worse than the reality of what can happen when it goes wrong. And maybe that can free you up to move past the fear. All right. Last question. One bold prediction for the future. What's your bold prediction?
It's just, I think, the hardest thing. Just kind of thinking about that. So I think give it 10 years and we'll see the metaverse is as commonplace as the internet. I think I myself am just learning about the metaverse because it's, one of those kind of new things. It's not new, probably. It's probably been around for years and I just didn't know about it, but it's new to me. So, but the more I learn, the more I'm intrigued. So I think it could really take off.
Okay. The metaverse is our bold prediction. I like it. Certainly, there's a lot of smart people who agree with you on that one too. So I'm excited to see what it turns into because I'm not sure that I feel like people have different visions of what they mean when they say the metaverse, but some
I don't know either.
Realities is interesting. All right, Jaynel, I appreciate your time today. This was a fascinating conversation. I appreciate your taking the time to share your insights with the audience.
Yeah, thanks, Jeff, for having me.